next we should learn, if we don't want to set up a VC, maybe we can even earn money ourselves by using AI, applying AI. And I'm very, very happy that we have a very special guest today who is in the room, I think. Very good. Coming soon. Raul Glavan, sorry. He's a, you could say, quant trader. So he earned a lot of money himself by just using different kind of algorithms, statistics, AI in several competitions. I read that he won against 2,500 other traders the Iron Trader 2011 award. Sounds a bit like the Iron Man, but he made a tremendous return on that. He also has a very, very well-performing Wikifolio in competition, and he wants to share this experience and help us also maybe getting rich or maybe just having a nice outcome of our own portfolio. So I'm very, very glad to learn more about that. Please welcome Raul.
Thank you. So, hello. Hi, everyone. My name is Raul Glavan. And yeah, I'm very happy to speak today about how to build a money printing machine with AI. And yeah, so we are going today to 20 minutes, much of content. I'm a very practical guy, so it's not too theoretical today. I'm just showing you how to do it. And just to think about why I am and why Rise of AI. This is my 5th time at Rise of AI. I'm very happy, and I think one of the most loyal guests of Rise of AI. But today I'm here as a speaker, and I'm very proud of it, and I'm very happy to be here today and speak about this topic. And yeah, so as I said before, I don't want to be too much on the theoretical side, because you have a lot of dreamers in AI, you have a lot of strategies and concepts and all this stuff, and you should, perhaps, probably, when, in 10 years, if. So this is not what I'm doing. I'm trading, and I'm trading now. At this moment where I'm doing this speech, I'm trading AI. My AI is trading for me, and I'm using my own capital, and I'm going with my own risk. So last year, I quitted my job in the asset management industry to trade my own capital with AI. So this is something from a very, I would say, a practical perspective today. And we have also 2 polls, so please feel free to answer them and participate. And I'm looking at the polls, so would be interested if you are using AI for trading, or would you use AI for trading, and also if AI is, if you have an AI, what makes money for you. So yeah, so let's start with the presentation. And like always, we have presentations in finance. You have always a disclaimer and a risk disclosure statement. So just to keep in mind, when we are trading, this is always with risk. And you have to do it on your own research and your own ideas. And this is not an advice. Don't rely on any data. Don't rely on anything you hear at this presentation. Make your own research, make your own analysis, and don't trust me. So this is just the statement for this. I'm not a financial advisor. So usually when I make a keynote speech or anything, I'm just talking about what I'm doing and who is Raul Glavan, but we have 20 minutes, and 20 minutes is not that much. So let me Google that for you. Just type my name into it, and I have a lot of interviews, I have a lot of articles. You can go, if you want, in different languages, in different lengths. 3 months ago, I had a home story with 10 pages about what my favorite food is and what I have done as a teenager. So if you're interested, go there. And as I said before, I quitted my job in the asset management industry, so I'm trading. And something what is interesting for you, I think, when I started trading this year, my own capital, when I traded my own capital, so then at this moment, I entered the World Championship of Trading. Just to prove it on a public basis, if it's possible to trade with AI and if it's possible to trade successful with AI. And well, it worked quite well. So I think most of the weeks in this year, or a lot of weeks in this year, I was in the first place in this World Championship of Forex trading, so I'm trading currencies. And at the moment, I'm something like 150% net return this year, and we go later in the metrics, but just about what I'm doing. And then the next topic is how to build a money printing machine, do it yourself. So, is it possible to build a money printing machine with AI? Yes. Of course, it is possible. We have a lot of quant funds. We have a lot of people doing this, and it is something what has been done in different endeavors, in different I would say structures, as a prop trading shop, as also as a hedge fund, also in the high frequency trading space. People are doing this, but they are very private. The most people don't talk about this. They don't talk about this public because it's obviously it's very lucrative if you can do an own money printing machine. So in this problem, it's very secretive, everything. So, but these data scientists, anonymous data scientists, are very happy they have their own money printing machine. So it is working. But now the problem is it easy? And is it easy? Is no. The problem is very, very hard to build machines like this. And the why, there are a lot of problems why it is not working and why it is very, very hard to do it. First of all, it is public data. Public data is very competitive. Everyone is looking on public data. Public data is, for example, prices of stocks, prices of other assets, and so on. This data is, everyone can access them, very cheap, very easy, and this data has nearly no prognostic value. It's very hard to get any insights out of this data. If you want some insights out of this data, then you have to use some alternative data. And this is proprietary data, this is private data, and this is very hard to get. There is also public data, a lot of good public data, but it is unstructured, it's hard to access, you have to put a lot of work into it. And based on this, it's very, very hard to get to this data, and this is why it's not that easy. The second thing is, if you want accurate data, and when you are a data scientist, you know accurate data is very hard because the most time series you get are just or often crap. And if you have crap data and you put it in your model, then you get also crap as outcome of your model. So you need very accurate data and not a lot of missing values, doubling data, and so on and so on. So, and this is also expensive to buy this kind of data. And yeah, then the next thing is markets are very efficient. Of course, markets have a lot of competition. All around the world, people are in competition in these markets, and this is why markets are very, very efficient. And it's very hard to gain an edge against other market participants. And you have also transaction costs. You have a lot of things. They are very, very hard to beat at the end on a long-term basis. And yeah, the relationship of asset prices have a lot of possible, unbelievable much of variables. They are influencing the market prices. And yeah, this is extremely competitive. Public data is nearly useless, so it's not easy, but it's possible. Okay, this is my cookbook. So we have 6 steps, but I've tried to do it. And the first 2, I think, are for me the most important. So first of all, data acquisition, and also the pre-processing of the data and the feature engineering. I would say on a very practical base, 80% of my time I'm investing in these 2 steps. So if you are into this field, please do a proper feature engineering, get a lot of good data and build your own crawlers. And for example, I've seen so many models in my life because I have more than 1,000 models built it. And I'm doing this for roughly 20 years. I started in very young age as a teenager. And I've seen so many problems in just feature engineering. Please don't do this. For example, missing values. Find something how to interpolate them, or don't use it at all if you have too much missing values or doubling data. I have seen a lot of people don't measure their features about their importance. So you have to do an let's say analysis of your features and how important they are or not. And you can do this, for example, with decision trees. With decision trees, it's very easy to do it, and then you get how important these features are. Other thing what I've seen a lot of times is, for example, collinearity. You have, and this is just crazy. Don't do this. Don't use technical analysis. Technical analysis doesn't make sense if you know what it is. And this is the problem also. The most people don't have enough domain knowledge. They are just good in the number crunching. They are just good in the model side, but they don't have idea about trading, about stock markets, about all the other things. And based on this, they are using, for example, 20 technical indicators. But the problem is the technical indicator is just a derivative of the price. So you are using 20 times different price series. It doesn't make sense. Please use not these technical analysis indicators. I'm showing you today a lot of cool ideas, what you can do practical for your models, but don't use them. And also what I've seen, this collinearity in technical indicators, but also a lot of other indicators you can use. Don't do this, and it doesn't make sense. And it makes your model slow, and your predictive value will decrease. So this is, I think, one of the most important things. And yeah, I'm using most of the time LSTMs. Sometimes decision trees, I like them because they are more basic. You can do this feature important stuff easier. With LSTMs, you have more the option with sensitivity analysis, and this is very hard to do it. So most of the time, it's easier for you to start with decision trees. But when you are using LSTMs, they are very good for this for time series analysis, especially for financial data. I like them very much. And also, this is also very practical. I have seen it in hundreds of models out there. They have a look-ahead bias. They are using data when training their models. At this time, when they are training their models, they don't have this data. For example, for LSTMs, you are normalization the data because you have an interval, and if the difference is too high, the deviation, the LSTM is not working. Okay, so you are doing a normalization with your data. And I've seen so many models. They are normalization. They are doing this normalization with their training set and their test set at the same time. So at the moment you are doing your training set, you don't have the future data. You don't know the normalization of the future in 10 years. So it doesn't make sense, but there are a lot of models you see with this problem, and a lot of other problems. For example, if you have economic data and they are published on, let's say, on the weekend, on Friday evening, but you're calculating your model with data from Thursday, then it doesn't work because you are using data from Friday when you are on Thursday. You don't have it in reality. So look-ahead bias is very, very dangerous. And well, I can talk about this hours. Oh no, weeks. But we have 20 minutes, so I have a lot more content. Run the model, yes. Optimization, and please always do use humans and do these steps always again. Challenge your code, challenge your databases. This is very important, and really go and do the visualization work. I've worked with so many people. No, I don't want to do visual. It takes too much time. Well, if you don't do the visualization, then you don't see the obviously problems. For example, outliers and so on. But okay, we have to go on. So this is something some people know me from the sentiment space. And they say, Raul, I know what data you mean. You are talking about Twitter data. And Twitter data is the hottest shit. So, and I said, no, guys, I'm using Twitter since 10 years. I was one of the inventors of Twitter data, and I have done this speech. This is just what I want to show you. This is a proof from London, 2012. I made a speech in London 2012 to explain exactly how to do analysis with sentiment on Twitter data and also on other social media data, 2012. And my models are running in this time in 2011. I won a lot of competitions with sentiment analysis at the time. And no, this is not the fancy new shit. This is just very old, and I'm using it. It has some predictive value, and this data is very interesting, but it's not new. But I'm showing you what is new. So, this is not scientific, okay? This is just, I'm a coder and I'm doing thousands of models. So please, it's just how I see the world, okay? This is the easy public data, and this is what the most people are looking at. The most people are looking at fundamental data, price data, and technical indicators. So this is price to book value in the fundamental space. The price data, of course, is the stock price, for example, or the price of copper, or the price of anything. And there is also technical indicators, like oscillators, like simple moving averages, and so on and so on. But to be honest to you, this is the easy data. And the easy data, millions of funds, of people, of traders are looking at. This data has little value. You should use instead this one. It's hard public data. It's just what I call this, okay? And hard public data is, for example, sentiment analysis. Sentiment analysis has some value because it's not so easy to get the sentiment of the market, of the traders, of other participants, and this is very interesting data. We go later into detail of sentiment analysis. I'm showing you some of my sources, and you see that what I'm doing is a lot of data. I'm very much, I think it's just, I'm crawling data, and I'm pre-processing data, and I'm assemble data, and I'm very much a data guy at the end. And service, for example, LinkedIn layoffs is just it's just an idea for me, but that you have a definite idea how to get an edge on this market. For example, you are crawling LinkedIn, and in LinkedIn, you are crawling one company, and this one company, for example, you can see that 1,000 people, employees, are changing their profile at the same time. Now you know, wow, there is something happening. Probably, and this is what most of the times would happen, is there will be a layoff, there will be a job cut. So, but this information, you have to crawl in the media. If this information is not public at this time, you have an informational advantage. Because no one knows at this time in the market that, for example, this company is lay off 1/3 of the employees. But if you know this information, then you know usually markets are reacting in the same way when it's a stock, so it's rising. Stocks rise when people in this kind of layoffs are happening. So if you have this information before the market, you can participate. You can make your trades of it. And this is just one very simple example how you can use, for example, alternative data and how you build your own crawlers with public data. This is just public data. They are accessible, and you can do this on your own. You just need to build the crawlers and the databases. And then you have some very insightful data. Yeah, there are a lot of flows between asset classes. The CO2 report, I think, it's very useful. Insider trading, of course, but also insider trading, don't use it as the most people use it. It doesn't make sense. It's not one insider buys the stock and then it has an information value. No. For example, if you're using insider trading data, you need a track record of this guy who is trading this company. Because if he's a CEO and it was CEO before and previous he was also a CEO, so you have a track record of 20 or 50 transactions of this guy. And if this guy is doing well as an insider in his company, then you have an informational advantage. Number one. Number two, for example, you have to build ratios because the payments, salary of CEOs and other insiders are often public, and because when they are public, you can make a ratio. For example, if an CEO earns 10 million a year and he makes an insider trade with, let's say, 100,000 US dollars, this is not significant. But if this guy who earns 10 million invests 10 million in his own company, then it gets significant. So you have to do this number crunching really, really on detail. It's not that easy, oh, he's buying a stock. No, you have to analyze. Has he a positive track record? What is the ratio of his income? And so on and so on and so on. You have to do a lot of work from every single of these sources. And yeah, social media. But now, and this is where the real magic comes into, there's also unexplored, unstructured private data. And if you have access to this data, it's very interesting and you should use it. Agricultural data, for example, ESG data, patent analysis, for example, how innovative stocks are. You can compare them, and so on and so on. Credit card transactions, product reviews, IoT data, your whole house will be connected. You get a lot of interesting data out of this, construction data, weather patterns. It's just crazy because I've seen so many models and it doesn't make sense. Some of my friends are doing this at a fund and they say, well, I'm used this model for all assets. And I say, you really use the same model for forecasting an Amazon stock, like for forecasting the copper price, and you're using the copper price model for analyzing euro-US dollar currency pair. It doesn't make sense. So you have to do one model for one asset. This is what I am doing. I have for every asset I'm trading an own model. I know it's a lot of effort. It's not fun, 100%, but it's the only way. It's the only way it works. Sorry, it's very competitive what we're doing here. And now I'm just showing you for one of these points, it's just sentiment analysis, what my data sources are. And just for equity, and just one excerpt, just a small sample. So just for equity, sentiment, in the long term, I'm using this kind of data. In the medium term and in the short term, I'm using this type of data. So that you can just imagine, I'm using from the space of sentiment analysis, equity, something like several hundreds of several time series data. And all of them are compiled, are built, I'm testing them since, as I said, nearly 20 years. So as I said, yeah, it is possible to build these money printing machines, but I have not said it's easy. So, and I want to show you, for example, feature importance for my, in this type, it's S&P model. So it's also just an excerpt because I have a lot of features, but you can see, for example, I'm using a lot of corporate insider data because corporate insider have a prognostic value, and they are very interesting source of forecasts. And also S&P liquidity premium, mutual fund flows, and so on and so on. These are the top 10. And then I can show you, this is a bit borderline because now I'm showing you signals, okay? Don't do this, this is not an advice, okay? Never trade don't rely on this. But you see the green dots are entry points. They are buy points from the last 60 trading days. 60 trading days are something like 90 days in reality, so the last 3 months. And you can see that there are 2 signals in S&P. And yes, of course, they are perfect in this in this case, yeah. And also, for example, this is my feature importance of copper. And you can see it's whole different than my features I'm using for S&P. For example, you can see here, of course, copper, very, very important, is the production. Supply demand, all the economic stuff then is more important when you want to trade, for example, commodities. And also, you can see my signals, for example, for the copper price, also the last 90 days. And yes, also hitting very good. And yesterday, this is why I updated the presentation. Yesterday, I got a new sell signal. It's the red dot. So, but don't do it. And I'm doing it because I'm I'm doing a good of money with my models. But please, you don't do it. And for as you can see in this signals, I would say it's something like 4 weeks. This is the time horizon of every signal I'm doing. Okay, so you have seen how the signals are, how the feature engineering, and now you need some results. I think because now it's just a guy who's talking about, but what are real results? And this is, I want to show you also results of my trading. So what if someone comes to you with a back test, and in this back test he says to you, I'm 90% of the time, or over 90% of the time, I'm correct with my trades. And with what about when this guy says he has a profit factor over 30? 1 unit of loss has 30 units of winnings. So what would you say if someone is telling this to you? And you would usually say, and the maximum tolerance is just under 5%, you would say it's stupid, it doesn't make sense. And because look ahead bias, markets are efficient, sample size is too small, overfitting, and so on. And then let's go into real results. And real results are even better. So this year I'm trading with a 94% accuracy. These are real traded with my own money. This is an account in the US, and this is the World Championship account. So it's overviewed every day from a different party on a third-party basis. And they are scanning all my trades. Yes, sample size is small, of course, and I'm running far above my expected value. I'm running better than expected, but It's not bad for me, but I think I will get a drawdown in the future. And yeah, so I have a maximum drawdown this year of 2.3% and a net return of 150% this year in forex trading on the World Championship. So yeah, hopefully it was interesting for you. You get some insights. It was a pleasure for me. And yeah, we are at the beginning of the greatest technological transformation in the history of mankind. I'm very happy to speak today here at the Rise of AI, and thank you for your attention.
We have to try to keep a distance here on the stage. Thanks so much for this. We have a few questions for the audience, so I would try to rush through them. So Daniel Förster has a very good question, I think, that you can apply generally to models. So what happens if everybody or more people are using AI models, and especially if the larger funds are doing that as well? I guess they are already doing that. So
they are doing this, and the competition will rise. So the markets are getting more efficient. And when markets are getting more efficient, it's better for everyone. So bid-ask spreads are declining, the liquidity is higher. It's more fair for everyone if markets are getting more efficient. For example, when you are going to retirement and you have a portfolio of your stocks and you want to sell them, then you are getting the better price because you are more in the reality. What is the intrinsic value of your stock or your commodities or your currencies or what you have. So it's a good thing. But at the end, it will kill the profits and the margins, and the competition will rise, and it will getting harder to build these models. Yes, it's very hard then, yes.
Right, Oliver Rath has a question more around the amount of data, how you store that, how you handle it.
Well, I'm doing this completely on my own because I have seen a lot of things in this financial world, and to be really honest, I'm a bit paranoid, but I don't using cloud services. I have my own servers, and I storage everything on my own with my own infrastructure, and I think this is the only way you have to do it, because when you are having something that really works, everyone wants to have it. Want your code, want your data, and data is the most important thing and your best source for your models. So for me, I'm a bit paranoid, and I have everything on my own.
Maybe a follow-on question from myself. How do you spend your day? How much time is it on training the models, looking for new sources?
Well, to be honest, the most time is on the data side, and then there's also a lot of training, but training is paralyzed because I don't have to sit there and just watching the epochs running. But at the end, I'm always running some optimization on my models, and I'm always watching if there's something interesting in the data. But most of the time, I would say it's feature engineering is 80%, model is 10%, and the other 10% is something like idea generation. And I think this is how I spend most of the time, yeah.
So maybe about idea generation, Tina Kranz asked, what about special knowledge, maybe domain-specific knowledge? Do you have experts, people that you talk to? How do you gain that knowledge?
Yeah. Well, it's a good question at the end. You have a lot of network you are building in this time, and this is very important because when you are with these guys and someone is very strong in weather. And weather is very important, for example, if you want to trade orange juice, because orange juice is mostly built in the US, in Florida, and then it's very dependent on this weather. But I have no idea about weather. So if you have someone who is an expert in this kind of area and has a very specific domain knowledge about how to forecast weather and so on, then you are going to contact them. And this is what I'm doing a lot of times. I'm talking with the experts in their fields about how to get data, what is a reliable data, and how to use it. And this is something I have built a network over the last years. Yeah.
I think you inspired Oliver Rath, by the way. Here's another question. And he wants to start trading.
Yeah,
so
cool.
what trading basics do people need to know for AI trade well? Where to start, I guess.
Okay. Sorry, we have 20 minutes and 10 minutes. Wow.
We can post one URL where you can start reading.
Well, at the end, I hope you can code in Python. This is very, very important for you. Also, you need to learn the libraries, TensorFlow, Keras, and all this stuff. I think this is also very important. And then, if you want to learn, go on GitHub and just take the first codes you can see and try them. Yeah, try them in your own notebook. Is this working? Is this not working? Because the most models I've seen, they are public in the internet, are very, very simple. They are not complex, and you can replicate them. And just change the numbers, change the data, and so on. And this is, I think, how you can start practically. You have no idea then about neural networks, okay? But you can start with some models, yes.
Cool. And we posted in the chat, and I think I also already posted your website, so we can read a little bit about you because you share your knowledge. Thank you for that. Thanks for coming here, and I hope you will enjoy the conference.
Thank you. It was my pleasure.